This is Popping the Bubble with hosts Sandra Ponce de Leon and Pete A. Turner.
Hi, this is Jamie Finn. I'm the co-founder and president of Securitize, and we're here live in LA with Popping the Bubble.
Yeah, all right. Jamie, thank you so much for joining us.
My pleasure.
This is such a cool event, and we're really loving being here at Start Engine Summit here in Los Angeles. Start Engine is an equity crowdfunding platform that helps companies raise capital from the general public through the sale of securities like equity debt, convertible notes, and more. So really cool event, and you're a speaker here, and you're also the co-founder of Securitize.
Yep.
I guess tell us a little bit about Securitize. What does Securitize do?
Yeah, so essentially we provide a service to companies that want to issue digital securities on the blockchain. And so we are what's known as primary issuance. So we'll work with a company to take them through kind of onboarding of their investors, KYC, AML, so kind of these accreditations you have to do, and then writing of smart contracts that represent the security in the company. And then we offer a life cycle management product. So if you're going to pay a dividend or if things are going to be traded on these different new marketplaces that are coming out, we manage a compliance layer for all of that so it happens properly.
Okay, so what kind of companies primarily are going through this process with Securitize?
Yeah, I mean, I would say there's basically three major categories that we see. We see venture funds. So we're seeing a lot of kind of venture funds that are becoming tokenized, and it provides more liquid type of venture, which is really interesting, and it's purchasable by a lot more people. Additionally, we see real estate. So we have a number of real estate projects, things like actual specific projects. So either like developments in specific territories or, actual buildings and things of that nature where you're buying ownership of the property, but also the revenues that come along with it.
So it's a fractional ownership model.
Correct, yeah.
For the investors.
Yeah, for the investor. And then the last piece, which we have quite a number of, are kind of operating businesses, we describe them as. And, we categorize these things this way because each one of those three product types has different rules and regulations that apply to them, right? So operating businesses in particular, we have a number of offerings in market, doing anything from Bitcoin mining to just straight equity in really hot startup businesses that are looking to raise money in a different way.
Okay. And what are the requirements for a company that maybe wanted to go through your platform? And we're just talking about security tokens, right?
Right, exactly, yeah.
STOs,
yeah.
Which is what this conference is all about.
That's what the conference is all about. We're in the middle of trying to rebrand these things as digital securities.
It's like the tokenization of everything.
Yes,
that
is the theme, I guess.
Subline. Yes.
Yeah. It's a space. So I started in this space last summer and was probably one of the first investors in the space. So we wanted to tokenize a venture capital fund. And in that process, we tried to find a platform to run our venture capital fund on top of, because we didn't want to create all the software ourselves, because it's quite a complex process to do.
Yeah.
Unfortunately, we weren't able to find anything. And so Carlos Domingo, my co-founder, who's a great product guy, basically came up with this idea to build a platform to do it. Built a platform, and then we had a ton of people come and ask us if they could use it. And so we said, sure, we'd love to work with a bunch of companies. And kind of as we've gone through this journey, we've learned a lot of different things about the space. The really cool thing about this is you're kind of creating the market, right?
Yeah.
And so you're sort of developing it and learning as you go. And so we've, since then, worked on a number of projects, and we'll start to see trading here very shortly. Everybody in our market today is waiting for trading.
Yeah. Okay. So trading now, where is that going to happen? It's like that, isn't it? Open market or
open finance is definitely going to be one of the first ones. Shares Post will definitely be in that first group. I think T0 has announced that they'll start trading in November as well, just of their own token. So we're going to see a number of these things come to market, and the next natural problem that's going to occur is liquidity. So everyone's going to ask, okay, well that's great, but where's the liquidity? And so this is a problem that there's no answer for yet, and people will pontificate about it. But the reality is we have no idea because it's brand new.
Right. But what is the pontiff saying, though?
So they're saying basically, you have these classic chicken and the egg problem, right? So there's different ways of solving it. There's enough brave companies in the space today that are willing to go out and launch these tokens before liquidity is there with any scale. And the risk to a company in this space is, if there's no liquidity, you could see somebody try and take advantage of that by basically buying at a very low price and driving the overall price lower. Most of the initial projects that are coming out, though, are venture funds, and they have NAVs, net asset value, associated with them.
Okay.
And so almost all these funds have the ability to buy back their shares or tokens if the NAV drops below a certain level. So that'll help maintain liquidity. The thing people don't think about with this space is you're basically going public, right?
Right.
For all intensive purposes, you need to think about managing your cap table, your investors, and liquidity as a public company would do it. So if you don't do that, you could end up, with a token that's worth pretty much nothing. And we've seen this in the traditional ICO space already, where guys just kind of raised a bunch of money and forgot about the token. That's a bad strategy in this space.
Yeah, I mean, it is quite a different market than it was last year when this conference was really just about ICOs.
Right. Yeah.
Yeah.
That was almost a thing.
Yeah. And I mean, so what's going to, are ICOs dead now? Like, what's your...
So, I think... I think to investors, for the most part, ICOs aren't a great, investment, right? Because you're not actually buying an asset; you're buying the future use of a network. And buying the future use of something actually doesn't make any sense, right? Like, it's too expensive for me as an investor, and it doesn't make sense from a product point of view because that may never exist, right? So if I buy something that is a future thing that may never exist, then I've probably made a bad investment decision.
That probably happened a lot, right?
It happened to me. Look, I invested, and I'll use that term loosely, in a couple deals, and it didn't work out, right?
Yeah.
And this can happen with a traditional asset, but the thing is, in an ICO, you have zero recourse, and you have no rights to any of the underlying anything. And so, that's what's changed. I don't know that they're dead. I think that there's definitely valid use cases out there. They're going to be more few and far between. And we're going to see, I think, a lot of companies that'll raise money as a security and then, issue later, once they have actually rolled out the network and built the product, issue this utility token. But the utility has to go way beyond just a payment token. Payment tokens are not utilities. And so, that's one of the things we haven't really seen evolve yet.
And so you said that you jumped into the space about a year ago.
Yeah.
But were you in a traditional investment role?
No. My
just
background
made the
is
leap.
Yeah, my background's more. So previous to this, I was VP of Innovation.
Tennis pro. Please say tennis pro.
Yeah, no, not tennis pro. Oh. Yeah, I was a tennis pro. No.
I thought, what the hell?
Previous to this, I ran innovation for a very large European telco called O2. I then ran big data at AT&T. I sold a bunch of companies for Sequoia, Israel. So, I've done a bunch of different things in the tech space mainly. My last startup is a mobile advertising business called Aki. And I joined the founders there and helped them kind of grow that business. And when I was there, because we were in advertising, you're kind of always looking at new products. And suddenly there was all these blockchain companies looking to advertise. We didn't know what that was.
Yeah.
So, I had been told about crypto in 2014. Someone, I was at out in Napa, and somebody in the industry today told me, look, you got to think about Bitcoin not as a currency, but think of it as a protocol. And I had no idea what that meant.
Right.
I wrote a note down. It's in my Evernote. It's right there. I still don't actually know what that means, but, and so that's when I first became aware of it. I didn't really deploy any capital until probably, I don't know, just the end of 2016, right at the beginning of 2017. I took the Neanderthal approach to this. I logged into Coinbase. I looked at the three coins you could buy at the time, which was Bitcoin, Litecoin, and Ethereum.
Yep.
And I basically said, I'll take 20 of the most expensive, 100 of the next one, and 1,000 of the other one. And that was my investment thesis because I couldn't buy 1,000 of the most expensive ones. So I just,
and how did that work out for you?
It worked out okay.
Yeah.
I'm not, I don't really keep track of it.
Yeah.
But, the money some of that money went into the seed funding of Spice VC for sure. But it's, this type of market where you just, you kind of live, you learn, you deploy capital in certain deals, they fall apart. Like, I heard yesterday one of the deals I invested in was a total scam, right?
Oh, really?
Which I totally got scammed. It happens to everybody.
Yeah.
And, I lost 15 ETH. It's like, but then I thought about it. I'm like, 15 ETH? I think I paid like $300 for that. So it's okay, right?
Yeah.
But people in this space rationalize it on their investment at the time they make it. So they're thinking, that was $15,000. No, it wasn't $15,000. It was $300.
Yeah.
And so... especially in our space, we deal with it frequently with customers where, investors will invest crypto at one, because you can invest in projects that we run on either cash or crypto, right? And so people don't really understand. They don't read. It says it's very clear, but they don't really read very often the detail of it and say, when you invest, the price will be set here. And this is how we're valuing the crypto. And so one of the things we've seen change is companies before wanted to hold crypto. Now they want nothing to do with holding crypto. They basically want to liquidate it instantly.
Really?
Yeah. And so it's a real shift in 6 months of we're going to hold, we don't want you to just trade it to, actually we need an OTC to sell all that the minute you get it. And you're like, oh, okay. That's a different kind of suite of services that and we as a business have kind of evolved around kind of being customer driven. So we have a lot of customers today and they give us their feedback all the time and we try to incorporate that. It's everything from pricing all the way down to platform features. And so it's a new space. Everyone's kind of evolving it. So we're working,
And are you guys on a certain protocol?
We have so we're running right now on Ethereum.
Okay.
All of our apps are on Ethereum. They're all ERC20. We have actually issued security tokens on the Ethereum public blockchain, which is unique in our space too. So we have 3 issuances that are live. 2 of them I can tell you. Spice VC is live. You can search for it on a public blockchain, and 22X is live. You can search for that as well.
22X, yeah, I'm familiar with them.
Exactly.
So we 500 startups.
Exactly, 500 startups. Yeah, that was a super innovative project. Very hard, but super innovative. We just completed the issuance on that one. And that's the other thing about us. Like, we've done this, we've been through it, and so when our customers come to us with their challenges, we're not just empathetic, but we probably have solutions, because we've been through them. And so
let's talk about that.
Sure.
You quoted Alanis Morissette and said, "You live, you learn." So 6 months ago, ICOs were the thing.
Absolutely.
And now they're not.
Yeah.
So are we in a real space now, or are we just turning over so fast? It's like, you know what? Sprinkle some money around and see what happens, or maybe just wait. Maybe hodl your own money,
or even like the investors just wanting to get their money out so quickly. Then what happens?
Yeah, what are your thoughts on that?
It's a good question. And I think in this particular world, there is and to be fair, in digital securities, there aren't a lot of traditional crypto guys, right? This isn't the thought that. Guys who made money on these ICOs have now moved into this space is errant in 2 ways. One, most of them lost all of their money, right? It's pretty much gone because either they did a bunch of bad investments that evaporated or crypto just kind of collapsed, right? These are 2 things that happened at scale to a lot of people who put capital in there. The other thing is you're not going to get 1,000x return on this. 20% a year, like in a stock, would be pretty good. And so you should be thinking about this more in the context of a public market with real returns and be looking to invest in real companies that you understand. Don't invest in like super complicated financial instruments if that's not something you understand. Right. There's a lot of companies selling those, but for the most part, I wouldn't do that. Like personally, because I don't understand that. Like I like things that are simple.
Yeah, but a VC tokenizing a venture capital fund is not really to me, it doesn't seem that simple, but.
Well, the actual tokenization of it is one bit, but from an investment strategy point of view, basically what you're saying is you're going to look at these investment managers and understand if you believe they have a track record to deliver returns. And a VC fund's a type of bet you can make in the space that might see 100x return because they might make an investment into a company that might have that kind of return. Exactly. There's a lot of mights in that sentence. And so, those are probably the highest returning ones. Like if you had invested in, blockchain capital, I think at $1, I think their NAV is, multiples of that now. But
you have to in order to invest in this type of instrument, you have to be an accredited investor.
Right. Yeah. So in the U.S., during the first year, you have to be an accredited investor. After the first year, it unlocks, and retail investors can actually own it. It's not very well understood, this. You can have up to 500 retail investors that hold any of these securities. In a operating business, that's why I categorize them this way. In a fund, you can only have 99 investors, period.
Interesting.
In the U.S.
But
if they're international, you can have an unlimited amount. There's so many different nuanced rules to these things.
So are you guys also doing international work for your clients?
Yeah. So
the limitations of the U.S. market?
Yeah. So, we started as a foreign business. We sound American, but we started as a foreign company, right? So Spice is actually the first project we did is actually UK-based. And a Singaporean entity with a UK head office based out of Cayman, like the funds registered in Cayman. So, and for funds, Cayman is this is not an unusual structure. It's kind of very normal. And so that's where we started. So in order to do that, we had to research a whole bunch of markets. So we went out, we paid a good law firm to go and understand the securities laws in each space. Because Under Reg D in the U.S., there's one set of rules which apply only to American investors, no matter where they are in the world. You have an American investor who lives in Mexico or in Zimbabwe. They are an American. They have to comply with American rules. Under Regulation S, it just says you have to comply with the other country's rules. The trick with that is you have to know the other country's rules. And so you go and we researched and understood each country's rules and how you do offerings. And you could generalize it into something like simple as in the US, you can do general solicitation, which means you can advertise the offering. In Europe, you cannot do that. Okay. You have to do reverse solicitation. So
what exactly is reverse?
So reverse is basically you go to the website because you get in there. Yeah. It's the opposite of marketing. And then you register with the website and then they send you an email that says, "Hi, thanks for registering. If you want to learn more, come back." And then when you come back, they can show you the documents, but they can't do it before that. So, these little nuanced things about how you onboard an investor, how you accredit the investors, what the laws are in their markets, are all the things we had to learn and spend a lot of money on. And so we took that knowledge and created this platform to basically offer it to other people.
Yeah, amazing. Is there any particular company that stands? Can you talk about it?
I can only talk about things that are completed.
I see. Okay.
So Spice VC we've issued.
Right. Maybe talk about the 22.
Yeah, 22X. 22X is a good project. Yeah. So they had the batch 22 out of 500 startups had this very innovative idea, right? And so they said, instead of going down the traditional VC route, and this started in like November of last year. Right. They're like, instead of going down that route, we want to try and just raise a bunch of capital and deploy it pro rata into 21 companies, right? And so what ended up happening is they went out, they got a core group of founders together who went out on a roadshow trying to raise money for this batch 22. And so, the theory was batch 22 is a highly curated group out of Silicon Valley because it came out of 500 startups who have their own admission process, which is very complex and hard to get through. So it's kind of this top 1% idea. And then investors basically got a pro rata share of 21 of these companies by buying into this token. Right. Now, there is no VC involved. So it's all basically almost like a headless fund in some way where the money comes in, it's deployed into the companies, and then there's reporting back into the investors, but there's no additional investment going on. You're not going out and raising more money to then go and invest in other companies. It's a set portfolio, right? And so it was the first offering of this type. I wouldn't say it was the most successful thing we've done. How much did they raise? It's less than 10 million is the total amount. So,
and that has to be distributed
amongst all the companies. Yeah. And so, we just finished the issuance on it. So it wasn't, I wouldn't say financially it was the most successful project, but it was great insofar as we learned about how to do yet another issuance in a different world. We dealt with very different types of investors. So, for example, a lot of the investors in 22X are Japanese and Nigerian. So how do you do KYC, AML, and accreditation in those countries? What is it required? What are the rules? Right. Who actually can KYC somebody in those countries? And so as you go through that process, you see it happen, and then you understand better, where the complexity lies. And there was little things like, in Nigeria, the towns have different sub-village names. And so you had to find the sub-village in order to get it to pass through KYC. So again, little things you learn and deploy. It's almost like
you have to have, you're building this global database of expertise. Yeah. Yeah. Amazing. Wow. I feel like this was like an education, I just learned so much very, very quickly in a very short amount of time. Cool. And I know I want to be sensitive to your timing. Is there anything that we didn't get to talk about that you'd like to, talk about while we have you here?
No, the only thing I would add is, I would encourage folks looking at the space to spend a few more minutes understanding the business and the people behind them. The biggest challenge right now is capital formation. So these companies are really good companies, but they need investors. Yeah. And so if you are an accredited investor out there in the US, have a look, try to find some of these deals. And if you're not, other options that'll be coming down the line in a year or so where you'll be able to participate in this market as well. So one of the nice things about the US law is it means that the companies that are doing this have to kind of be around for the long term, because if they're not around in a year, they're not going to be able to raise any money from accredited investors. So that filter, which many people perceive as very negative in this space, I actually don't think is that negative. We should take it as a positive thing where somebody else is kind of stepping up to take that initial risk who has the ability to lose the capital, and then you can come in later and buy into it.
Right, right. Yeah, very cool.
All right.
Well, very exciting, and thank you so much for joining us, Jimmy.
My pleasure.
It's great
Thank you.
to meet you.
Likewise.